The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, market days. And wow, what a day this is. Very interesting. The last three sessions, well, I've been saying all week that I think this is one of the most critical weeks that I'm looking at from the perspective of what has worked, what has been working that has been, for me at least, a contrary move to not necessarily what I was anticipating, but what I would think would normally happen, and also what isn't working that should be working. So let me go through this very slowly. This is the Tiger Technicians Hour. My service is the opening call, plus, of course, this daily show, the Tiger Technicians Hour. And what I say to subscribers is that I think this is a very important week for a number of reasons. I'll go through it from last Monday when I was speaking about it. What I had said is that the move in silver, which had just started to kind of show a little bit of strength, more so on Tuesday, said to me that if silver moves without gold, I was more interested in the fact that it should help gold. But look what happened. Gold right now is down 8 off the low, but down 8 and being repelled from the Chapman Wave inside track repellent zone. Made a peak C about 2 weeks ago at just under 1370, trading now at 1340. The MACD has just turned down. It was quite good. The stochastic has really not rallied at all. It was a hint to me that I didn't want to go long any of the gold stocks because something was not quite right here. And if the weekly chart, you look at the weekly chart, this is merely just a sideways trading band. Let me just get out of this right now, the 120-minute chart, because I want to show you the bigger picture. The monthly chart was starting to improve to the extent that it bounced off the 9-period exponential moving average in the low teens, 13 teens, ran up to the 1360s in April, helped the candle a lot, and all it's doing is holding very steady. And what I've said for a little while now is that I don't really see a short in gold at this particular point, but that doesn't mean to say it can't pull back. It also doesn't mean to say it can't break out to the upside, but to break out to the upside, I need to see it trading in the 1380s, probably be there for about 2 weeks, closing in the 1380s for at least 2 weeks. Then I think I can consider that a pretty serious breakout in gold. If you look at the same thing in silver, that was a fantastic move going to a Chapman Wave peak D yesterday, if there's no new high today, recovery high that is, in the daily chart. The MACD and stochastic are very strong. Looks to me like silver's going to hold quite well. So that's why I'm saying this is a very important week, because for the first time you saw silver actually lead the metals to the upside. But at the same time, gold has just not yet followed. And I really think to get the propensity for more money to keep coming into gold, the gold stocks that is, and silver, you need to have quite a bit more on the upside and holding. However, if you look at the dollar, for full disclosure, in the opening call, we are long the dollar, been long for a little while. It's holding pretty well at 90.32, but there again, it's that same pattern, except in the weekly chart in gold and silver, you're looking at a high-level consolidation. Yeah, we've got a low-level consolidation, and the MACD is improving, stochastic's improving in the weekly chart. And let me just quickly go to the gold, because I'd like to do each one of these in a very clear way. Look at the technicals in gold weekly chart, very negative. And look at the silver chart, should have improved, but still, the stochastic is just coming off 25%, under 20% at 25%. That's good. And the MACD is just crossed positive. What a divergence. I don't know how that's going to resolve, So I'm just saying that there is a divergence here. Will one drag the other up or down? We'll see within 3 days. Here we go. We're going to go back to the dollar and look at this. In the dollar, the weekly chart improving, but I haven't yet seen the equivalent, the commensurate rally in the price itself. Remember, I spoke about this since I've been playing a lot of clarinet lately. I'm back to thinking musically. When you blow X amount of air, you want the reed to vibrate, and the amount of sound to come out is about X. If it's 2X worth of pressure, you want round about 2X worth of sound. If you're thinking of a race car, you put your foot on the accelerator. You don't want to flatten that accelerator, have the wheels spinning and nothing's happening. You're not going to get it, but you want pretty much 2X worth of pressure, 2X worth of speed. And we're not getting that. I want to see the dollar break into the 91.20s. Then I think we're looking at King Dollar. Once Tom O'Brien's name, aptly named King Dollar, to become king once again. At this point, it's just a really nice rally, and it's telling us that stocks like a J&J, which is down, is going to struggle. The internationals, the multinationals, that is. So let's get back to our story. So I said I want to do each little section. Look at this. High-grade copper. High-grade copper holding very nicely at the upper end of a trading band, but that trading band is in the lower range in the weekly chart, and in the monthly chart, it is in the upper. So it's a real mixed picture saying you've got high-grade copper not breaking down, holding quite nicely, but pretty much towards the lower end in the 3 teens rather than the 320s. So let's go back to the EUR USD currencies. Yeah, we're looking at the currencies. Pulls back sharply today, going to the lower end of this high-level consolidation, upper-level consolidation in the weekly chart. Monthly chart still looks pretty darn good. The yen, USD JPY, this is the dollar-yen currency pair. Very nice. Now it's gone to a leg D. So this leg D says that there's at least shorter term, I can't even say intermediate term, I can only say shorter term strength in the yen, and that's very important. At 107.59, it needs to hold the 107s is really important to hold on the short term, and try to get by Tuesday or Wednesday into the 108s and hold there. Now, crude oil, why is it important? Because the dollar pulling back, and so the dollar rallying, historically, meaning not forever, but in many periods over the last few years, when the dollar's rallied, crude has come down. When the dollar's come down, crude has gone up. At this particular point, crude is at the higher level of its trading range. It's above the 200-period exponential moving average. I've got it in the weekly chart as a leg C, and the monthly chart is a leg D, right bumping up against strong resistance back in the 78s. That was back in 2015. We're back there now at 68.28, down 5 cents. I'm watching this closely. Why? Because it's impacting the IYT and the airlines. IYT pulling back, down 191 at -1 in the iShares transportation average. Here again, we're looking at the rectangle formation or an arch formation in the upper end of the arch, but in the mid-range of its all-time high back in the 206s, 207, and the low that was made recently in the 176. I'll be back because I want to take a little time talking about yields. I've been saying for a long time, yield could be camel's back. That's I've got a straw called. I'll be right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So a bunch of things going on here. I was just reading through so many questions. I'll deal with each one of those questions because each one is really a very important remarks that I need to cover. Look, Boeing right now is down 3 at 337. My contention is that Boeing has made its high, that there's a real good chance that it's going to have a consolidation that includes months, not weeks, but months. I could be so wrong, but I'm looking at a very weak weekly chart at peak D. The daily at 371.60 on the 28th of February, all-time high, peak D. Did the one-to-one, those green lines that I'm showing in the daily chart on the left. The middle chart has a cup formation that looks like it could fail. The MACD is very weak. Stochastics way down 39%, showing no strength. On balance, volume is moving up because there have been some good up days in between on the weekly chart. But that monthly chart, that peak E at 371.60, I'm watching it closely. If there's a move down at any point on a weekly basis with a close below 307, 10% below where it is right now, that would suggest to me that Boeing has made the kind of top that says it needs time. I'm not talking about how much further down. There are other things that can measure that. I don't even want to get into that right now because it hasn't even broken down in either the weekly or the monthly chart. The technicals have in the daily, not the monthly. But Boeing is going to be a big tell. It's pushing the market lower down today, the Dow, because it's part of a Dow component. Apple as well. Apple is having some problems here. And I've got it as a peak C in the monthly if there's no new high, but a peak G in the weekly. And that was a very interesting move to the upside that went to, there's no other way I can count it, I believe. Is that correct? Yep, no other way. Oh, isn't that interesting? So the low that was made in Apple on the 25th of September at 149.16, the low that was made in February, 150.24. Ho, ho, ho. So this says I could give it an alternate count because it didn't take out the left side low. I really don't like to do that. I just don't think it's necessary to get so far. See, this is one of the few failures at a peak C in thousands and thousands of charts in the Chapman wave at an all-time high. If it fails here, I don't know what to say. It happens. I mean, I could give it an alternate count, but that's bending rules that I just don't even need to do. yeah, it failed to see if it takes out 164 support, that's a real failure. So the way I'm looking at it now, that V-shaped pattern and failure on the right side right now says that there's a good chance Apple is making a top that will only be established as a more intermediate term top if it closes under 160, and I think it needs to do it soon, and it needs to do it by the first week of May. So at this point, all I can say, daily chart is in the sell mode. Weekly chart, by the end of the day, I might have to call this a sell mode because of the very weak technicals of the close yet again, sharply below the 9-period moving average. Monthly chart hasn't given a single signal. It's a heads up, but not a signal at all. So Apple's still holding okay in the longer term. This is what I wanted to say. So I was talking about the transportation index. So I want to look at XAL. This is the airlines. Very poor action. A peak E in the weekly, peak E in the monthly, double top in both cases, and whoo. Is this another one of those? So this is D, E, F. No, this really is a G. This can be called an alternate count. G/C, I can go with that. I don't have any problem. So this is very serious now in the airlines for a number of reasons. One is because if it's including Boeing, then you've got some of the airlines that look pretty toppy in the shorter term, plus they've got all this, the work that they have to do now because of this last incident with Southwest and LUV, and I think that's going to cost a lot of money and a lot of time, a lot of effort. So it needs to be done, I'm sure. But I'm watching this real closely. And if you look at CSX, this is the one I've been using for a little while now, as really a very good indicator of the rails. This big spike to the upside is A. That's recycle. Yeah, this is a D. So this is leg D in the daily. It's leg AB. It's F/C in the weekly chart. And you can't just have one area in the transports doing very well. But if the truckers keep doing nicely, that to me is a good indication of the economy. So I'm going to keep that in mind. And we saw that the rails, based on CSX, is actually very nicely. UNP, always think United Parcel, of course, it's not. Union Pacific also just hit that trend line sharply, pulls back. It's a D and it's an E. Yeah, this is something to watch. Union Pacific at 136.39 down to $1.60. So I think I covered a whole bunch of the questions. JBHT, does it need JBHT? Does this need to make new highs above February highs? Transportation. Yep. JB. Didn't I just look at JB Hunt? I had it there, but I forgot to talk about it. Maybe JB. Remember it spiraled up the other day. Yeah, this is a leg B. It's probably a peak B today. It's under the peak E high that was made in the weekly chart, and under the peak D. JB Hunt Trucking down 77 cents at 120.55. Nice action. All I can say, I haven't finished this. I'll do the notation over the weekend. I really want to look at it in much greater detail. All I can say is that 118 is key support that it needs to hold by Tuesday or Wednesday at the latest. And if it can get into the 122, anywhere in the 122s, that'll be really good action. All right. Question now about SSYS. What was the question? SSYS. This is Stratasys Limited, I believe. Yeah, there it is. So what is the question? Michael wants to know, as I'm refining my research, I noticed a couple of interesting aspects. Okay, just a general question, a lot of information. Hey, very nice little report you did there, Mike. I'll have a look at it over the weekend. I'm just going to say that SSYS is one of the 3D companies. It's acting and holding very nicely. We actually own one in this particular sector, which is today is actually up 0.54%. I like that. I needed it to be up. I like it. This is a sector that might be under the radar, and my subscribers know we're trying to find under the radar stocks. We had one that got away from us. We got it today at the day's low. I'm always a little suspicious when we are the low for the day. I'm just suspicious. Let's put it this way. It's up very nicely from when we entered, but that makes me very nervous. Yeah, so SSYS, this is just the start of a move. You'll see the lowercase h, that's a successful M so far at 21.44, up 33 cents. And this is Stratus Systems Limited. It was an Israeli company. His name I can't remember anymore. I actually met a person who had worked for the company. And then they were taken over by, I think this is it. It was taken over by a company, I think in Minneapolis, an American company. And they were discussing the aspect of the conservative Americans and the really aggressive Israelis who just go with cutting-edge technology and push for everything that's worth. I said, it's going to be a fascinating thing. Look at the digestive phase it's had. This is a company to keep your eye on, SSYS, Stratus Systems. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So let's do this. So PG, which is, did I finish SSYS? Let me just say that for SSYS, if the market is going to really pull back, I got to talk about that in a moment. It's holding very nicely above the 9-period moving average of 20.92. If it starts to break 20 support, I think it's going to go back to this whole consolidation phase. The lowercase h goes to lowercase m, and they can continue for quite a while. So it needs very quickly to get to the 2230s. I would say, when I say quickly, I mean by Tuesday or Wednesday, is to hop over the 2174 200-period moving average resistance and get there real quickly. So I'm finished with that one. What was I saying? I did the Boeing, I did the GBHT. Ooh, a lot of questions. Did the SSYS, AXP. So American Express. This is so. Look at this. American Express spirals up yesterday. It looked lousy. I mean, it struggled for a few days, and this is the reason why I'm saying that it's so important that the price goes commensurate with the technicals. What I'm looking at here is that this spike to a new all-time high in leg D in the monthly, and the fact that it's down today $1.74 at 100.63 without making a new high says watch real closely the low that was made yesterday on the gap up, 99.05. Remember, I have a rule of thumb about gaps to the downside, how you trade them. The very big gaps, that is, not just a little gap. I'm talking about a massive gap. But there's also a methodology on the way up. But most importantly, let me just say that if American Express holds above 100.20 all day today, regardless of where the Dow closes, S&P closes, it is part of the Dow. It means that by Monday or Tuesday, if there's a rally above today's high of 102.67, there's a real good chance it'll make that leg D, and that'll be very positive action. It'll then be dragged down by the market, because what this price is saying from yesterday to today, and if it goes higher into Tuesday, that says this is in play as one of the leaders in the market. If it takes out the low that was made of 99.05 yesterday, the gap up low, and closes below that, it says, watch out, I'm going to fill that gap. This is really a very important period. I'm going to talk about the market in a moment. I wanted to just go to more of the questions. You see, my concern was, look, Triple M, lousy action, down $1.67. UTX, this is my Dow Quartet. A little bit weak today, but basically lousy action in the weekly and the daily. This is really important. Now you've got GE on news goes up, but I think it's going to give back a huge chunk of the gain, 40.40. I don't think it's ready for prime time yet. Yeah, this is a leg C, but we'll watch this real closely. We don't have a position. I was thinking of even having a position under 13, very limited risk, more time than anything else, because I felt sure that GE would get back to 13. I just didn't want to tie up capital just sitting there. But look at this nice move, very big. This gain from the 12, what was it, 12.56 or something? The low was 12.73. From 12.73 to 15.05, that percentage gain is what one would normally see in certain stocks over a period of months. So this is a little bit of an excessivity to the upside. A couple of things I want to look at here is a question about, so I did J&J, Procter & Gamble, same category, multinational. Whoa, gaps down yesterday, follows through to the downside today. Peak E in the monthly chart. Oh my, this is not good news. So yeah, the multinationals are under tremendous pressure. XLP, I haven't looked at that for a couple of days. Oh, gee, terrible, horrible peak E. Not good at all. If you're looking at XOM, so now this is what I was saying over the last many weeks. I've been saying I wasn't sure that I could comfortably say to subscribers, for a dividend stock, you could get into Exxon or Chevron for the intermediate term, because there's such volatility that the downside risk means that you could give up your dividend and you could lose in capital gain. But this move up with the oils going from the 72 level to the 79s is really outstanding, except it's a single leg A up after a smash to the downside in the weekly chart. All I can say is that this is the stock that I said, if you want to trade it, you can go long in the 73, 72 area, and then you've got to exit as it gets towards the 79, not holding it into the 80s, because at some point it will break into the 80s and go even higher. But the modus operandi has been to short or get out of the highs in the 79s and get in the 72, 73, and just see where it can go. But if you've done that, you can see where it can go. Then you can put a stop in. If you don't want to short, you don't want to get out, you just say, you know what, I'm going to have a stop and be comfortable. Maybe 76, maybe 77. But at least have yourself ready to say, look, I've got capital gain and I can go out. Would I recommend it now? I still feel the same way. I'm sorry, I haven't yet seen the technicals in the weekly charts give me that kind of confidence to say it's looking fantastic, it's going to the highs. And it's almost the same thing with Chevron. So I hope I've answered the question. And really, the XLE is a part of the same question. This is almost the same thing. This is only a leg B to the upside. When I did some work on the last night when I was looking at the XLE, I was kind of impressed. Yes, it is a single leg A, but it's actually a B because it comes from the previous low that was made earlier this year. And this is now leg B in the weekly chart. Not only that, it's testing the trend line resistance. And the XLE, Select Energy Spider Fund, that U-shaped pattern that can repeat for a second U is a lot more positive. So I'm looking at this whole situation and saying, in this particular week, we've seen a breakout in the oils that has impacted positively the XLE. So that makes the XLE somewhat in play. Let's see what the next pullback gives you. If it 73.27 daily, a minus 39. If it can break under 71.90, between 71.90 and 71.50, that's where I'd like to reassess and then say, okay, maybe it's going to go to the higher highs. I'm prepared to go long on certain areas in XLE. But that's my outlook. I did that. Oh, I'm going to include the OIH. But if you include the OIH, type it into the right little box. There it is. Peak D holding very well. It's the same sort of thing. Here the weekly chart is improving, but it's nothing like the XLE, which is a much broader, a more comprehensive look at the various energy stocks. So all I'm saying is that the support here at 26.89 would be 26.20s to 25.60s on any sharp pullback. But so far, let's see how this holds over the next 3 days, because that is good action. It means that the sector rotation. I think I've covered almost everything. Yes. Yesterday I was asked about SK. I can't remember what SKF was it? SKF sketches. No, SKE. SKE. SKF was a short, ultra short something. Financials, right? Yeah, financials. No, sketches, SKX. There you go. Look at that move. So I said I'd be real careful. Looks to me like it's in a rectangle, a rectangle formation. Just got to be real careful. There it is, down 11 at 30.38. Was trading yesterday at this time in the 42s. Whoa, up and up.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento will be hosting a 90-minute webinar this coming Tuesday, April 24th for all Fibonacci 24/7 subscribers. Larry has teamed up with fellow trader Jim Bartoloni for this informative 90-minute workshop, taking the ABCD pattern to the next level. Throughout this 90-minute live webinar, some of the topics Larry and Bart will be discussing include the origin of the 1.618, the golden mean, the relationship between numbers and cycles, time and price, the simple math behind market moves, and much, much more. This workshop will be archived if you can't attend live, and all new subscribers get a 30-day money-back guarantee when signing up for Fibonacci 24/7, so you have nothing to risk. For all the details and to sign up for Fibonacci 24/7 today while gaining access to Larry and Bart's webinar Taking the ABCD Pattern to the Next Level, visit the front page of TFNN.com now. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi folks, we're back. I've got wonderful, wonderful students out there. Yes, I got reminded that there is an indication that there should be a Dow pullback early Monday morning based on the Chapman Wave trend gauge. Let's go to Tom in Franklin, North Carolina. Tom, how are you? Oops, is Tom there? I am waiting. Yep, yes, no, yes. Tom? Oh, sorry, Tom. You dropped. Maybe I waited too long. I just saw your name right. So Tom wanted to know about oil. And let me just go through this again. Excuse me. If I'm looking out, as I said in a talk I gave a couple of months ago, if I'm looking out 3 years or so, I think crude oil is going down very dramatically. But on a shorter term basis, there was a lot politically that was going on that was really a lesson to many of us. Remember, there was talk that the Saudis had enough reserves that if oil dropped to nothing, they could sustain their own economy for about 3 years. I think they went for about 3 years, and it was really touch and go. And there was a period where they needed somehow or other to really get that oil, all the oil-rich countries becoming oil-poor countries needed oil to scream up towards the high 50s, let alone the 60s. Yeah, at 68, I think that they've expended as much politics as possible. And this is where oil gets the big test. I suspect that we've now got somewhat limited upside with oil. Maybe it could touch 70. Yeah, it could just go above that 2015 high of 78. So it could go to maybe, I was at 68, so it could go to the 71, maybe even 72 area. I'm thinking maybe upside. That's where there's a lot of pressure to start pulling back. Big cap on the upside. But the downside doesn't have to break. If it holds between here and the 65, 62s, that's still fantastic. So it's done the job. So now we're going to see how it resolves itself. So, Tom, I don't know what your question was, but my answer would have been, if you asked me where's crude oil going, I would say that crude oil has done pretty much everything that anyone could have wanted if it was a political and economic move. If it's purely that there's a lack of resources and that now we've got no more glut of oil, that's something different. I don't believe that. I think there's just plenty of oil. Yes, I can see people driving bigger and bigger cars. This is that whole thing starting in the 1960s, 1950s, and the 60s. I've measured this in the automobile size. I'll be talking about that in about another few weeks. Don't want to talk about it now. It's not necessary. But yes, I think that people are using more oil. But in fact, I think there's still a lot of oil out there. So this is a move. I call it politics. I don't mean politics. I mean, it's a manipulated move. That's what I'm thinking. So that says, yep, you can go down, but there's still a lot of support because they were able to do it. They should be able to maintain it a little longer. So yes, I think there's a lot of support in oil. Next question I had was, could you look at APPN? APPN, I don't know if I've ever looked at it. This is APN called what? APN Corporation? Corporation A shares, trading at $28, down 43 cents. What's really important about this, that spike, it was an IPO. Back in June of last year, it's down in the 17s or so, and it spirals up to the 43s. Now it's trading at 25. This seems to me like it's in play, but you got to be in to be able to participate. This is not the technique that I would use for subscribers, but I suspect, Greg, because you asked about it, in at 23.12, sold most of it at 39. Fabulous. You already know how to play these things. Then it comes down sharply, and you still have a token number of shares waiting to add back to a position. So this is what I'm going to say to you, because it's down 43 cents today. How about at $28 in the 27s? Start a position. This is one of those that you've got to put up with a little pain, but when it's a gain, it just spikes to the upside. You want to be in it because it's very difficult to get in once it starts to move to the upside. So I'm going to say in the low 27s, you can organize whatever stop you want. I would not give it much more than a point to start with, maybe a point and a quarter, but that's where I would probably. Today's low is actually holding very nicely. I still want to say the 9-period moving average, 27.36, somewhere around that 9-period moving average, APPN. Now, if this is your style, I believe, so someone else, that might not be a good technique to use. Bob, go along into earnings release, M, Caterpillar, UTX, Lockheed Martin. Oh, man. I don't want to get too fancy here. It's just a lousy charts. Absolutely, the earnings could be quite positive, and they could spike. I'm just looking at the chart, and I'd say any spike, I would buy a pullback. If it spikes, let's say M, whenever that comes out, it's down $1.49 at 217.36. If it spikes to 221 to 223 and then pulls back, that's when I'm prepared to assess it. I'm prepared to miss a spike to the upside on earnings. If you want to play it, then this is maybe something you want to use options. Look at if you get a 220 option, you've already missed April, so May. That'll be a little expensive. Actually, I wouldn't be able to do it because today, yeah, if it's a 220 option, I wouldn't pay more than 80 cents. And if you can get it for a spike, that's fine. I don't think you're going to get 80 cents. So that's about, yeah, I'm done with that playing the earnings. I just don't do it anymore. There was a period where I nailed quite a few, and there was a period where I was just, thank goodness I didn't do anything, because it would have been merciless, because it either went up against me or down. I just decided, why risk it? Because it's just the news report. Excuse me, and a sneeze. So under those conditions, I'm just going to say to you, I don't do that anymore. There's better ways to lose money. And the number of times you actually make, yes, you make a fortune if you're right, but boy, it's just so quick to lose X amount of money just in a minute. The earnings come out, and the next minute you're down, or you're up, and it's going against you. I'm just tired of that. I don't do that anymore. It's not worth it for the amount of money you now have to make up in 1 minute. It's just, I don't like to do that. Okay, now I want to talk about the market. I'm going to go to the TLT. See how sharply down it is? Well, look at this. The TNX, and I made a big deal about this for a while. I've been saying, I believe that the rates will go higher, and the market's going to ignore it until it starts to focus on it, and it'll only focus on it when it's opportune to do that. Right now, it's becoming opportune to say, hey, wait a minute, other things are not working. What else can we look at? Oh, my God, the interest rates are back to where they were the other day when everything was looking great. No, it's just convenient because it becomes part of the package that says it is in play. And all it needs is to go, it missed it by 2 cents. It needs to go above 29.43 to break to a leg E in the weekly and a leg C in the monthly for the 10-year. Don't ignore this. This is something very important. Now, I'll be back. We'll talk about the market.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Well, stay tuned for Steve Rhodes coming up, Dave White, Tom O'Brien, and check out my opening call over the weekend. I think you'll be fascinated, and hopefully it's going to be a profitable venture. And yeah, so this is very important. So the question is, the stocks, is this year's pullback like 2000? I don't think yet it's like 2000 for the semiconductors, but I am, well, first of all, I'm furious at myself. We were short really nicely. They were long, made some money, very nice money actually. Got stopped out on the actual SMH yesterday for break-even trade there. But it didn't give me a chance to switch to the short side. And, you know, this is the whole thing, and I keep talking about it, and I'm remiss in following through. What I'd said is if you can get the trend and if you can get the exact turns, it gives you such a big comfort because it allows you to put in, you don't have to worry about short-term stops and buy stops and all that. So we did short the semiconductors, then we got stopped out and I couldn't get back in. So we did go to the long side, and now we've reversed, and now it's going to be even tougher to get back into the short side because I think the SMHs are telling us about something in the market that's really important, number one. Number two is the QQs where we bought the 300% short within an hour of the all-time high. That hardly ever happens. And I allowed myself just fractionally to get stopped out. We did make money on the way down. We made money even when stopped out. But now it's going to be really hard to get that position back again, I think. And that was perfect. You know, it was perfect to use that as your call, and then you could just, even if it ran up even high, I didn't think that we would make a new all-time high in this phase of the down move to 175.21 on the QQQs. It's going to make it harder for me and my subscribers to be able to get back into a really good position on the short side if this is not going to have a rebound by Tuesday or Wednesday. The reason why I thought today would be a rebound day in the Dow is look how well up until now the MACD was holding. Even now, the MACD is very strong. Even now, the stochastic is at 89.48%. It is strong. There should be a balance. The market is being dragged down by some of the more volatile stocks, but at the same time, I don't deny what's happening. And what's happening is it's under the 9-period moving average. The work that I send out my subscribers starting tomorrow, Saturday, through Sunday night into Monday, Facebook. Very important.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.